Hey everyone, welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of accounting and financial management for bankers. Acha, today I'll be talking about the next part of the series. So today we'll be talking about the area of financial management in terms of the working altogether. So let's understand the terminologies first. Here comes the first question, everyone. The first question says, which one of the following statements is not correct? Acha, today's class is all about multiple things. So I am be covering module A, B, C, and D, a few portions of each and every module in order to make you acquainted with all those areas of these different modules altogether. So let's quickly start it away. The first question is all about which one of the following statements is not correct. Income tax is a direct tax, or income tax rate is same for individuals and the companies. Income tax is different from for domestic and foreign companies, or the format of for income tax returns is different for different classes of assessees. पता है there are overall 7 different kind of persons under Income Tax Act. That includes individual, that means you and me. That includes AOP, association of individuals, association of persons, body of individuals, kind of club I can say, where you can find only individuals. We'll call it BOI. If there are different people, we call it AOP. We have partnership firms, we have HUFs, that is Hindu Undivided Family. Then that is family business of Hindus, and then the next point that comes is the area of the companies. Then we have the artificial juridical person, that includes the colleges and all, they're artificial juridical persons. And then we have all these different formats of assessee. So there are different assessees, so we have different kind of forms and workings for all these people altogether. Now the formats are different. Then the next point is that the income tax rate is different for foreign domestic countries. That is also true. The income tax rate is same for individuals and the companies. This is where there's a contradictory statement between B and C. The first one is correct, that income tax is a direct tax. So if I talk about this portion, income tax rate is same for the individuals and the companies. This portion is not correct because for individuals we have slab rates. For the companies we have flat of 22% and 30% depending upon the Income Tax Act policies there. The provisions of the Income Tax Act 1961. Okay? Then here comes the next question. Which one of the following statements is correct about the deferred tax asset liabilities as per IND AS? If I talk about the IND AS, Indian Accounting Standards there, deferred tax should be classified as current assets, current liabilities. The deferred tax liabilities should be current liabilities. Deferred tax asset should not be classified as current liabilities, and deferred tax liabilities should not be classified as contingent liabilities. Achha, contingent means what? Contingent basically means that sometimes it is if I talk about the contingent liabilities, now contingent means which is not certain in nature. So in this case the correct answer is that deferred tax assets should not be classified as current assets. This is correct because they are covered under non-current assets. So we have to consider that part, that it is basically a non-current asset. Okay? That is why the deferred, achha, what do you mean by deferred tax asset, everyone? DTA or deferred tax asset can be referred to as something where in the books of accounts, when the books of accounts that are prepared under Companies Act and at the same time which are prepared as per Income Tax Act, this portion varies altogether. Then there can be a situation where we are paying more tax today, less tax tomorrow. So we call it deferred tax asset because we are paying more tax today. And when we talk about income tax there, that is in terms of the working, when we'll pay less tax today, that means this portion is basically deferred tax liability, because maybe right now we are not paying, but later on we'll have to pay a lot, right? That is what we can call it as deferred tax assets or deferred tax liabilities. Next question. The accommodation bill is drawn to finance actual purchase or the sale of goods to facilitate trade transmission when both parties are in need of funds or none of the above. If I talk about the accommodation bill is basically one when one party and other party, there are two parties and both of them are in dire need of money. A is also in need of money, B is also in need of money, and ultimately both of them say that in this case the ultimate thing is that let's issue a bill and we will use that bills of exchange in order to get something from the income tax. We can get a loan there from the bank. So basically on the basis of this bills of exchange they will get a kind of security. This is discounted and then the bank will give money of 10,000 to A. Now A will share this particular money with B, and then what they will do that right now they will take this money for the 3 months, and then after 3 months they will collectively return the same to the bank, and they will not disclose the fact that this is basically bills receivable was issued out of nowhere. So in this case what they are doing is when both the parties are in need of funds, both needs it, ऐसा नहीं है only one particular person is in need of it, both of them needs it, that is why they'll be doing it. Right? Then everyone? Okay. Then let's move on and talk about the next portion there. The next question says the contingent liability would appear on the liability side of the balance sheet, asset side do not show in the books of accounts or note in the balance sheet. But the contingent liabilities are those liabilities which are not certain yet. We are supposed to pay to them, but there is a chance that we do not know whether to pay them right away or not. That is what we call it as contingent liability. The contingent liabilities can be defined as those which are uncertain. For example, bank guarantee. Right now I don't have to pay. Maybe in future I might have to pay. है ना? So that is what they call it, the contingent liability. So these are, just because these are uncertain in nature, what will we do? These would be noted in the balance sheet as a footnote, everyone. We will show it as a footnote in the books of accounts, right? So there is nothing else that we'll do about it, but we will note it as a footnote. We'll disclose it, but we will not give anything else, right? Acha, do you know our Mahapack is getting bigger and bigger, and the Mahapack is becoming more Maha even. How can I say that? In our Mahapack now you're going to get more marathons, bigger marathons, then doubt classes, then you'll be getting the era of doubt classes, bigger classes. Then in terms of that we are also coming up with mini marathons for you as well. So all these things we are coming up in our case. So if you're looking forward to it, then I think you should really look forward to it as early as possible. You should purchase it as early so that you can claim the maximum benefit out of it, right? So at this point of time, we are coming up with the era of the sales and everything else is going on. So if you're looking forward to it, then you can check it out on our website or in our app for further details, where you will find all the details regarding the Mahapacks. Mahapacks is basically something where we are going to talk about the benefit of the people in such a way that in this particular Mahapack you get multiple batches, multiple bilingual English medium both are open, test series open, video courses open, revision whatever we are coming up, revision batches open, then mock tests are also open, PDFs are also available for you, videos can be seen as many as times that you want to, even the previous and the current batches and the batches, everything is available for you. So this is something that we are covering up in terms of our the batches that we are coming up, right? So if you're looking forward to it, I'm also conducting a class at 8:30 to 10 p.m. every single day. So for this week I'll be meeting you at that point of time itself. So if you're looking forward to it, then kindly check it out on our website or in our app for further details. Right, if you are looking forward to it, then what you can do is you can use the code July 77. Right, so that will really help you in terms of buying it at 77% discount. Okay, now let's move on and talk about the topic further. See, this is noted as a balance sheet in terms of a particular disclosure. This is nothing but a disclosure. Next, AS6 revised is applicable on which one of the following assets? Goodwill, livestock, plantation, or plant and machinery. AS6 overall is something that has been now removed. It was earlier there. That was earlier for depreciation. Right now it has been introduced in the area of PPE, property, plant and equipment, that is AS10. So it covers goodwill. Goodwill is basically something which is an intangible assets, and the valuation of intangibles are done under other accounting standards there. Then we have livestock, the stock that is living. I cannot say I have a goat and it is depreciating every single day. Then plantation is again something which is live in nature. So then the point is, plant and machinery is something that we can say. The biological things do not depreciate. Depreciation is what? I'm using this pen every single day. It's getting older now. Then all these things are there in the books of accounts. Now that is what we call it as the tangibles. The because of usage, wear and tear, scratches, etc. things happening, technological changes happening, the value of that machinery reduces. That's what we call in terms of the depreciation. And in a proper tangible asset which is subjected to usage, utilization, obsolescence, technological changes, so then the value of that declines over the period of time. And that is plant and machinery in this particular MCQ. Right? Warehouse expense is an example of production overhead, selling overhead, distribution overhead, or none of the above. When I talk about the warehouse overheads now, warehouse overheads are basically something related to the storage. So in this case, it would cover in the area of distribution overhead. Right? Acha, next question. Net annual value of self-occupied house property treated such is fair rent, nil, reasonable expected rent as reduced by municipal taxes paid during the previous year, or none of the above. In this case, when I talk about the net annual value of the self-occupied property, if I'm looking at the self-occupied property, this is basically a property which I am having. So I won't give rent to myself. Now, that right pocket I'm giving rent to the left pocket. That never makes sense. So in this case, this is basically the annual value of a self-occupied property is always treated as 0. Next question. So this is a question that we have already done now, but I think it's just a repetition. Rebate under section 87A can be claimed by a residential, any resident or resident individual, or any person other than non-resident. See, this is available only to the resident individuals, nobody else. You and I can claim 87A only if we are having an income less than 5 lakh rupees per annum. After deductions, if the amount is more, then we are subjected to the area of we are subjected to the proper taxation. And there they say the particular person is allowed not to pay 12,500 or the amount of whatever tax is there, whichever is less is basically something that they will not pay at all. Even if the tax becomes due, you don't have to pay it. Okay, next question is medical insurance premium incurred in case of senior citizen is eligible up to under section 80D. In terms of 80D, for all the people who are senior, we take it at rupees 50,000. We have a clue there, that is 50,000. If you talk about us, there's an individual, for us it is 30. For the people who are higher, who age, that is above 60, they have a particular amount up to 50,000. The fixed variable cost classification has a special significance in the preparation of cash budget, master budget, flexible or capital. When we talk about this area, the fixed variable, there is a part which is fixed and the other part is variable. This is there in terms of flexible budget. In terms of the master budget, everything is added. Master is basically just one particular budget which inculcates all other budgets, while cash budget totally talks about only cash. Then flexible budget is the one where we have different units altogether. We prepare different units. Okay, that's what the master budget is all about. Next comes Ram and Company account is a real account, nominal account, representative personal account or artificial personal account. Ram and Company. Don't go by the word company, everyone. Company doesn't mean that this is actual company. When they use the word Ram and Company, that means it's an account. Because that's a business of a particular person now. So that means we call it a real account. That is covered under artificial personal account. Acha, theek hai. When we talk about it is covered. Real account is totally for assets. My mistake. These are covered for assets under personal accounts. I was thinking about the personal account term. The point is, it is a personal account, and under personal account, it is covered under artificial person. Because Ram and Company is not a living human being, not like us. There are three kind of artificial persons overall together. One is natural person, then we have artificial person and representative personal account. In this case, it is a personal account where we are talking about artificial personal account. Okay? Chaliye, that's it for the day. But before I end, I hope you have checked out our website or app. Yet, if you haven't, then let me show you our JIB courses are there on the Play Store, where you will find it on Adda 24/7 app, as well as you will find it in terms of our organization as well. The website, that is www.adda247.com. Okay, you just have to go on to this area. Just go on to our JIB 2023 area. There you will find that the Sankalp batch is there. Sankalp batch 2, which has just started from July 3rd only, so not much time has passed. What you can do is, overall 200 hours of classes are available, 97 test series, 181 ebooks, everything is available there. Then what you need to do is, you can click on buy now. You can use the code July 77 and you have to apply it. You can get a discount of up to 77%. If you are doing it through app, you can get up to 78%, and you can buy it for 45,999.77. And one of the best things to look forward is the Mahapack. Why do we say Mahapack? Because through Mahapacks you get every access to the every single batch that has been already conducted or whatever would be coming up. So both of those batches would be available for you. So what you need to do is, you need to go onto the area of JIB CIB Mahapack. Under JIB and CIB Mahapack, we have JIB Ka Mahapack, JIB as well as CIB Ka Mahapack. In this, all you can do is, you can click on the area of buy now. Use the code you can use the code July 77 and you will get a discount of 77%, and you will buy it for 10,453.27. Again, I think if I talk about 12 months, it is less than 1,000 per month. So if you are looking forward to it, then kindly hurry up and check it out on our website or in our app for further details. Thank you.